The U.S. banking sector is navigating a rapidly evolving financial landscape in 2025. Economic uncertainty, regulatory changes, and technological advancements pose both challenges and opportunities for banks. From cybersecurity threats to interest rate volatility, financial institutions must stay prepared to mitigate risks that could impact their stability. Here are the top 10 risks facing the U.S. banking sector in 2025 and how they may shape the industry. 1. Rising interest rate volatility. While the Federal Reserve has signaled potential interest rate cuts to support economic growth, unexpected fluctuations could disrupt bank lending and profitability. Sudden changes in rates may impact mortgage lending, loan repayments, and deposit interest costs, forcing banks to adjust their strategies quickly. 2. Increased regulatory scrutiny. In 2025, tighter banking regulations are being implemented to address financial stability concerns. Stricter capital requirements, stress testing, and compliance with anti-money laundering (AML) laws are putting pressure on banks. Institutions that fail to meet these requirements face hefty fines and operational restrictions. 3. Cybersecurity and data breaches. With the rise of digital banking and fintech integration, cyber threats have become a major concern. Hackers are targeting banking infrastructure, customer data, and payment networks, leading to increased cybersecurity spending. Banks that fail to implement strong cybersecurity measures risk significant financial losses and reputational damage. 4. The rise of fintech disruptors. Fintech companies are reshaping the banking industry by offering low-cost, tech-driven financial services. From digital-only banks to AI-driven investment platforms, traditional banks are struggling to compete with the speed and efficiency of fintech firms. Failure to adapt to digital transformation could lead to declining market share. 5. Economic uncertainty and recession risks. Concerns about a potential recession in 2025 are influencing bank lending decisions. Rising consumer debt, slowing economic growth, and geopolitical tensions could lead to higher loan defaults and reduced credit availability. Banks must carefully manage risk exposure while ensuring they can support customers in uncertain economic times. 6. Declining commercial real estate values. The commercial real estate sector is facing declining demand due to remote work trends and retail closures. Many banks have significant loan exposure to commercial real estate properties, and a downturn in this sector could lead to increased loan defaults and financial instability. 7. Liquidity challenges and bank failures. Several mid-sized banks struggled in 2024 due to liquidity issues, leading to concerns about further bank failures in 2025. The Federal Reserve and FDIC have introduced measures to stabilize the banking system, but liquidity risks remain high, especially for banks heavily reliant on short-term funding. 8. The shift to cashless transactions. Consumers are increasingly using digital wallets, cryptocurrencies, and contactless payments, reducing the reliance on traditional banking services. Banks must adapt to the shift toward cashless transactions by enhancing digital banking platforms or risk losing customers to fintech competitors. 9. Geopolitical risks and global banking stability. Geopolitical tensions, trade conflicts, and global economic instability are impacting the U.S. banking sector. Sanctions, currency fluctuations, and supply chain disruptions could lead to market volatility and reduced foreign investment, making it harder for banks to operate globally. 10. Consumer trust and reputation risks. Public trust in banks remains fragile, particularly after high-profile banking failures and rising concerns over unethical financial practices. Transparency, fair lending practices, and customer service improvements are critical for banks looking to maintain consumer confidence in an increasingly skeptical market. The U.S. banking sector in 2025 faces a range of risks, from regulatory challenges and cyber threats to economic uncertainty and fintech competition. Banks that proactively address these risks through digital transformation, risk management, and customer-focused strategies will be better positioned for long-term success. Investors, policymakers, and consumers should stay informed as the financial landscape continues to evolve.